The attitude you need to build wealth is think long-term and have faith. If you find it difficult to make smart financial decisions, it's probably because you're thinking short-term. When you think long-term, investment decisions can be easy. One of the most common mistakes is to invest too conservatively to be able to have the retirement you want. Our experience is that most people need a decent return, like a long-term average of 8% or more, to have the retirement they want. This means you'll need to invest in the stock market. To invest effectively in the stock market, you need to think long-term and have faith. We find that most people believe the stock market is far more risky than it actually is. Quite simply, they have a short-term outlook. They focus on the short-term ups and downs and not the long-term growth. You need to have a 20-year view, not a one-year view. We analyzed the S&P 500 in depth since 1871. The facts are, the stock market consistently rewards long-term patient investors. Fact, the worst 25-year period ever was a gain of 5% per year, which means you more than triple your money. Fact, the longest it has ever taken to recover your money after a down year is only 7 years, not decades. And that was right after 1929. The key is having faith. When the markets are low, you need to be confident and see it as a buying opportunity. Long term, the stock market always goes up. The problem is they don't have faith. They only are confident enough to invest after the markets have gone up for a few years. They only invest after they've been hearing and reading good news about the stock market from the media and from their friends. But that's usually near the end of the bull market. If you have faith all the time, then you see the buying opportunities. So here's how you do it. Let's say you went into the future with a time machine and you learned just one fact. 25 years from now, your investments will be worth 10 times what they are today. Until then, who knows? But 25 years from now, you will have 10 times as much money as long as you stay invested. If you knew that one fact, what would you do during a market crash? You'd see it as a buying opportunity. For example, at the bottom of the market crash in March 2009, I published an article called Irrational Pessimism. If you sold then, you lost many years of growth. That's the mistake you have to avoid. If you maintained faith or bought more, you've done very well. What's the message? Faith gives you an optimistic outlook. Investors that have faith in the markets tend to usually have good experiences. It's their outlook that's different. Because they are always confident that it will go up long term, down markets are not scary. They're buying opportunities. The key to building wealth and having the retirement that you want is to invest with a long-term, optimistic outlook, and most importantly, to always have faith that it will go up over time.